Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I'd like to look at the sharp decline in the euro against the US dollar that we can see unfolded here. This was a setup I looked at in our training webinar yesterday, and I want to go through it today because it's a good, in fact it's a brilliant example of my holy grail trade setup that we teach a lot in MTPredictor. And I'll show you why this is so good and how we unfold and how we identify this. What is a Holy Grail trade setup first? Well, a Holy Grail trade setup is a setup we have unfolding here that unfolds as the first correction of the first move of an important high. The reason we like this is because the decline or move or rally, depending which way it's going, in this case a decline, is very sharp, because normally if this is the initial correction, it's normally in Elliott wave terms a wave 2, and normally after a wave 2 we normally get a wave 3, and a wave 3 is normally the strongest and longest in Elliott wave terms. So this setup represents the best trade setup that I know of in terms of being able to have a large profit for a small controlled risk. And I'll just go through this and show you how we do it. So the first question is, how do I identify whether this is an important high or low? Well, this is why in MTPredictor we go to the higher time frame. So the last chart was a 15-minute chart. I now go out to a 60-minute chart for the higher time frame. I'll scroll back to before this high unfolded to show you how excuse me, to show you how we can do these levels in advance, and that's the important part, to have these in advance. For this we have a decision point tool. Really easy to put on the chart. Right mouse click, do decision, and as you can see that places this on the chart in advance for you here. If we scroll forward we can see that this level caught this high beautifully before the market started to decline significantly. But the point being is this level was on the chart for you in advance. So what can we do with it? Well, if we now go down to the shorter time frame, which in this case is a 15-minute chart, which is the one we're actually trading, can you see how this hourly decision point caught this high here? So in other words, this was a larger degree resistance zone. In other words, this made this or defined this as a major pivot. So when the market came down, this would be considered wave 1. When it goes back up here, it could be considered wave 2. So when we place our normal analysis on here, rather than going for the first target, which is here, we actually, at the very least, we then look to come down to the typical wave 3 WPT. And if I scroll back, you can see this would have been done just as the market was being entered, which was there. So in other words, you'd come out to this green zone for your potential first target, and instantly you can see here that you'll be trading 57 mini lots mini lots to keep your initial risk small and under control. This is our position sizing, and at the first target the profit was approximately 10 times the initial risk. That is why these trade setups are so good, because they represent the largest profit in terms of initial risks. So let's see how this market unfold. And as you can see, the market, or the euro, took us into a short trade here. The euro then declined nicely, and now hit our first target at this level here. So even at this first level, the potential profit was approximately 10 times the initial risk, or in other words, a profit of approximately $4,000 for risking 2% of a $20,000 sample account, which would be $400. So profit to initial risk 10 to 1, so that was really good. However, now we have what we call the strength band on our STF, which is our oscillator here, and we look at this and we can see that our STF oscillator has exceeded the strength band here. Now what that means is this market is trending, or as we call it, strong. So in other words, we move to our ATR stops, which is our red dots here for our trade management. So if we scroll forward, you can see that these red dots here would have kept you in this short trade, kept you in this short trade, kept you in this short trade, all the way down till the market would have stopped you out at about this level here. So if I drag the risk reward down to this level here, you can see that actually it stopped you out here for a, well, the profit was absolutely huge, of approximately, we'll call it 23R. In other words, all for a $400 initial risk, this trade would have banked a profit of approximately $9,400, or 23 times the initial risk. And this is why these Holy Grail trade setups are so good, because it gets you in at the very start of what is the strongest and longest wave in any completed Elliott wave sequence. Also, what we can do is, do you remember we put this hourly decision point on our chart here? Now what I can do here is, if I go back to the hourly chart, there's our original decision point up there. As this market is declining down, actually no, I'll go back to the 15-minute chart. What I want to show you here is on the 15-minute chart. What I also want to show you is another tip that I teach in the trading webinars, is I look at the DP of the last swing. This here is the last connected swing into the high. There's our hourly DP up there. So if I put a DP off this level, again this projects in advance a potential support zone, and as you can see it was still way below the market. But look what happened. As the market, if I go through to real time now, as the market declined down, just look where this low actually came in, which was right at this decision point level, which was projected off this pivot well in advance. So as the market was coming down here, you could have had confidence that it was going to go down to this level. But that was just an aside point to show you another technique we can use in MTPredictor. But for this video, I really want to just recap on this Holy Grail trade setup here and go through the main points. The first point is that we have to define a major high or low, which is what we had here, and for this we go to the higher time frame and use our decision point levels. As you can see, that caught the high brilliantly. The initial decline down here would then be considered a wave 1. We then look for the ABC correction into a automatic MTPredictor setup here. In Elliott wave terms, this will be considered a wave 2. We then look for at least a typical wave 3 WPT here, which means that we're looking for at least a wave 3 type move off this setup. Once the market reached this level, we then looked at the STF, saw it was strong, used our ATR stop to then manage the trade all the way down to here for approximately 23 profit. And these are standard trade management guidelines that we teach again and again and again. So this is not an example just oh, isn't that good in hindsight. This Holy Grail trade setup, as I've gone through here, is what we teach in our trading webinars and have taught exactly the same, literally again and again and again and again. And as you can see, this would have resulted in an absolutely brilliant trade and caught a lovely decline on the euro on this 15-minute chart.